Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Wednesday afternoon. I hope you all had a great week so far. As always, before we jump into the markets and my portfolio, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend is that if you haven't done so, go and check out the Elliott Wave principle, which you can read online for free when you're using the link that's down below. With that said, we can jump into my portfolio, and we'll see that we have a slightly green start into the day. So the holdings themselves are unchanged. So we still hold 600 GameStop shares, investments or small positions in Cause, Neo, Immersion, Barnes & Noble Educational, a few in quotes abandoned positions in Greenwave. SunPower went bankrupt, so that one's irrelevant, and Faraday Future, and minor option position in Novavax and Grab. And against our 600 shares, or my 600 shares, there are 6 covered calls with an expiration date of January 27. Now, if we look at the chart, and we can actually start with GameStop, we see yesterday after market close, GameStop reported its earnings. I pointed out that in my opinion, we have basically wave 1, wave 2, wave 3, and are currently on the way down in wave 4. And in wave 4, it looks like we have wave 1, wave 2, wave 3, wave 4. So the whole thing as a diagonal, wave 5. Potentially this point here, which means now we might get an A, B, C move upwards, followed by another 5 waves down. So that's my opinion. Now, obviously, the candle that we had here yesterday with the earnings, I'm going to get rid of that vertical bar. So the candle that we had here yesterday with the earnings made a new low and a new high. So it matters in which order that happened. And if we switch, I think on the hourly chart, we don't see it yet. Or we do actually, no, we don't. 5-minute chart. So if we look on the 5-minute chart, we see that we first made the new low, finishing the, if we zoom out again. So first we made the new low, finishing the basically 1, 2, 3, 4, and 5, almost reaching the 100% target for the 5th wave. And then we reached a new high, yeah, which points towards, basically, it went like this, up, down, and then up. So it kind of, I'm never happy when one candle plays out multiple movements. We had the same happen in Neo at some point, also at the earnings actually. And so it kind of makes it a little bit harder to be confident in certain labelings that include that candle. But from what I expected to have a 1, 2, 3, 4, and 5, that would theoretically check out. Now, labeling that subwave, especially with the strong movement that earnings caused, is a little bit harder and a tougher story. But overall, overall, that's what it looks like, which means, again, it looks like we finished 5 waves down and should now potentially get an ABC move, for which we would have to zoom in. So that would be wave 1 up, A, B, C, potentially, maybe not even finished. And then we get another push up for wave C. So, but the 5-minute chart is a little bit too, too not cluttered, but has a lot more noise. So anything below the 1-hour chart has a lot of noise in it. So, and the 1-hour chart doesn't help us because there it's still only one candle. But technically, I'd assume, especially we broke this high. So first we broke the low point here that we already had, which makes this a potential wave 5. And then we broke the high point here, and which points out that, yeah, like from here we started a new pattern. And so visually, this could be A, B, and now wave C. Although wave C wouldn't need to make a new high here. So it would just need to, depending on what kind of corrective move that is and so on, of course. Yeah, but we can see that our target areas here would be, if we reach the $30 mark, we would be okay with that. Yeah. However, again, because we have one single candle that had the whole thing play out, we're just gonna wait and see. I still believe that my prediction is in quotes accurate, and we would have, as said, potentially now finished wave A. We'll get a wave B, and then we get a wave C that I don't know where it takes us. Yeah, I don't know. But once we have that wave B finished, we would know. So technically, I'm expecting to potentially go down here. I was also fairly accurate so far because if I recall correctly, a couple episodes ago, I actually mentioned that for wave A, I expect to reach the 50% target, and we missed it by 10 cents. So 50% low, the low here was 25.67, and the 50% target is 25.57. So yeah, not too shabby as for predictions. As said, as mentioned, this might turn out as ABC and would be sufficient if it goes to $30 and a couple cents. Could go to a new high. Theoretically, if it makes a new top, so higher than what we had here at 32, then we would have to consider the whole thing as a flat correction, but then things become a little bit harder to label because in a flat, we would not start with 5 waves, but we would have corrective pattern, and then a 5-wave impulse down, whereas in a zigzag, we have 5 waves, so impulsive pattern, corrective pattern, impulsive pattern, or diagonal. Yeah. So yeah, what does it mean? It actually means if I'm fully correct, we would go up, as said, at least to 30.11 right now. I would have to, in quotes, yeah, not hope. Actually, if my shares get called away right now, so if we today finish at slightly above 30, for example, or even if we go to 32 and we get them called away this week, it would actually be not that bad because I could then sell new covered calls for extra premium. So yeah, like I don't think I can lose here. So worst case, I miss out on profit. Best case, it plays out exactly the way I expect it to. So again, A, wave B, although wave B might be very, very short considering how fast movements are after earnings. Yeah. Then we get a wave C that, considering how sharp this move is, might be a little bit dragged out. And then with that wave C, we finish wave 4, and with wave 4, or most likely finish wave 4 unless it turns into a combination of corrective patterns. And then we get our next 5 waves up, and hopefully by January 17th, when my call option expires, we hopefully are on the upwards trend, but still below 30. Now, I could be wrong, and we just rally up from here and whatnot. GameStop's quarterly results were, in my opinion, actually not that bad. They beat the expected earnings per share. So expected was a loss of 3 cents per share, and reality or result was 6 cents profit per share. They have now $4.6 billion in cash. They are debt-free despite declining revenue. So this third quarter versus the previous year was a decline in revenue. They still actually increased their net profit, I think is the metric. And so overall, yeah, like, so there would be reason for an upward move. But on the other hand, I also noticed that most of the posts online focus on the decline in revenue without really, or at least the headlines focus on the decline in revenue without pointing out that debt-free, positive earnings per share, and so on. So I guess we'll have to wait and see. Obviously, right now, it looks like there's some upwards movement coming. But again, even with the pattern that we assume we're looking at, that would be expected, but we would still expect a further decline. Then one other important aspect is that the quarterly report also includes the statement that the company does not anticipate or plan any further at-the-market offerings this year. I mean, the year is almost over, yeah. So, but we're doing the previous earning reports or, yeah, like calls immediately after, or even, I'm not sure if during, but immediately after, basically, the price plummeted because the company sold more shares to build up the 4.6 billion that they now hold. Now they officially mentioned that they don't plan to add any more at-the-market offerings. Yeah. So much about GameStop. Yeah, we're looking at an 8-hour chart, so it will take a couple of days for this to play out. Obviously, if we were to, even if we were to, there we can add a retracement. So we see at which point I would know that I'm definitely wrong. For that, we need I think it's 138, but I'm going to double check. Yep, 138, that's the percentage retracement level that we need. So if GameStop reaches basically 35, so, or I mean, it could briefly breach it, but if we have candles closing outside, yeah. So because the 138 retracement would be if this here is a flat correction, but it would then need to be somehow ABC, ABC up till potentially here, and then ABC, and then 5 waves down, yeah. We have a potential flat correction in Bitcoin, so where it's maybe easier to explain that if you don't fully grasp that yet or don't fully understand flat corrections yet. I have to say the labeling of the corrections is obviously the challenging part of Elliott Wave Theory, and unfortunately there is one correction type, and that is the flat correction that actually can make a new high, which could then be confused with correction finished here and actually impulse up, when in fact it's wave A, wave B, wave C, yeah? So, and a flat correction wave B can retrace up to 138% off wave A, which means it makes a new high. And in Bitcoin, we will see that it can spike a little bit through, but we shouldn't have candles closing outside, at least to my taste, we shouldn't have. And then we get another wave down that very often will then go below the point of point A, which is then very, very surprising when you already expect you have a 5-wave move up, but then suddenly only have 3 waves. And after that, you suddenly have a retracement that breaks the low here. Yeah, like, so really, really tricky thing. Either way, so that would be the level that we would have to break to be sure that somehow the correction is finished. It's not a flat correction and we are on our journey further up. As long as we stay below this, I'm going to remove it so it's not confusing with my actual prediction or labeling right now. As long as we stay below this, we would assume that we have 1, 2, 3, 4, 5 as a diagonal. A, B, and now potentially C, as we said, slightly above 30 would be sufficient for that move. And I'm going to add an expansion here. I know it gets a little bit cluttered on the chart, but it is what it is. Yeah. So that would be the target areas for that move. Although if we make a new high, it would need to be a flat correction. So we can look into the rules and guidelines of zigzags. So yeah. Just so from our one-page cheat sheet, we know that wave 4 is in, I'm going to look it up and tell you again, wave 4 is in 32% of cases a zigzag and in 48% of cases a flat, and only the remaining 20% are split up between different combinations. So we have a higher chance to have a 3-wave move here than that it's a 6 or 9 wave move that consists of some whatever double zigzag, triple zigzag, and so on, yeah. And therefore, we always look for those 80% instead of trying to focus of catching the 20%. Now, in a zigzag, zigzag subdivides into 3 wave. Wave A always subdivides into an impulse or a leading diagonal. Wave C is always an impulse or diagonal, in that case, ending diagonal. Wave B always subdivides into a zigzag, flat, triangle, or combination. Wave B never moves beyond the start of wave A. So if we consider this leading diagonal followed by wave B, it never moves beyond the start, which means the 100% target would not be possible, and we should at most get to 32.11, and that's not even likely. But our minimum target for the wave C would be here, and I'm not sure if we have a guideline for that here in the book. If wave B is a triangle, okay, if wave blah, blah, blah. Wave B typically retraces 38 to 79% of wave A. So we would expect, we already probably retraced most of that. So if we now, so basically, what was it? Wave B typically retraces 38. So that would be somewhere here to 79. And we actually already hit the 79% retracement with that peak. Also going to update this here. We don't need the 0 and 38.2 anymore. For now, we have the 50% mark that we reached in our potential wave A, or missed by 10 cents. And as I said, we should get our wave B till here, and then we get our wave C down and should probably hit the 61.8%. For that, we could add another expansion just to make things more cluttered on the chart. Yeah, like this. If this is indeed our wave A finish and wave B indeed would go till here, we can see that our minimum. If we go that high, we actually, our usual targets wouldn't even be that low. Yeah? So there is also a 161.8 expansion level that is possible, but those are the most that's the most likely target area where we could say we take a profit here if we were to trade this direction, and as we go closer to here, then consider using a trading stop or something like that. But yeah, so that's how it looks with GameStop. How long have we now? Okay, 20 minutes basically just about GameStop. So with that, we can move on, I think, from GameStop for now, and we'll just have to keep an eye open the next couple of days to see if we're right or if we get proven wrong. Either way, my positions are going to be fine either way. Yeah. So looking at Barnes & Noble Education Inc., we unchanged. Zooming out. Boop. So we basically, like I covered, or like I mentioned in detail yesterday. So if you want to know more, check out yesterday's episode. We basically have no 100% solid labeling for this part, unless it turns into a diagonal, which would need to be 1, 2, 3, 4, and now wave 5. But we are relatively certain that we have 5 waves finished, correction finished, and are now in 5 waves up in whichever form those 5 waves play out. So we still haven't reached our target areas, and we'll just keep on holding our position. Grab, we are on the weekly chart, we don't need to bother. Immersion unchanged, so waiting for the breakout here. Cost unchanged, waiting for the breakout here or to the bottom here. Neo unchanged, we believe the bottom is in here. We called it quite well, mostly. Actually, no, we called Neo actually really quite well. And obviously could still be proven wrong if we somehow barrel down now here, but overall I believe that, as said, from here we'll get our next 5 waves up. And Novavax, game of patience, that should be the next wave 1, 2. So if I'm right, the next couple of weeks should have strong upwards movement. However, for my January 17th call options, it probably will be too late. Bitcoin, since we talked about earlier about flat corrections, here we have a nice example. So we have 3 waves down, and then we have 3 waves up, very, very nicely, and we exactly retrace 138%. So wave B retraces 138% of wave A. And while we have a short spike through this, we don't close outside and basically in the same candle make our way back down. The big question with Bitcoin is basically we reach the minimum target for wave C, which is here the 100% retracement. Or expansion, sorry, the 100% expansion. So wave C should be 100 to 165%, and we reach the minimum target here. So the question is this wave C finished? Or is this only part of wave C and we still have to get a push further down, which long-term wouldn't matter, because then we would go down in the next couple of weeks to worst case 88,700. And our small Bitcoin position would be at a 10% pending loss. However, after that, we should get a further upwards movement. So long-term, it really shouldn't matter. Short-term, it just would offer us potential extra entry points. Unless we break the level that we had here at 101,435, that would kind of confirm that we indeed are done. So that was the wave C move. And this is already the next 1, 2, 3, 4, 5. Yeah, so we'll have to keep an eye on that. So, we have to keep an eye on that. But that's basically where I can see a flat correction, because it's possible to label this as 3 waves and then believe, okay, correction is over. We retrace 21.4%, which is not the most likely level, but it's actually the least likely of our usual levels. And then one would start looking wave 1, wave 2. Oh, this should now be wave 3. Very strong movement expected. Stop loss could be at the low of 0.2, just to then have this happen, to get stopped out and then miss the next movement up. So missing flat corrections, definitely a great potential to get stopped out on trades that actually would pay off with a little bit more patience and a little bit more leeway. And but in Bitcoin, that's why we just have to wait and see how this actually will pan out. If we look at HNT is still, should still go strong. We don't have a detailed labeling. XYO should, as said, in my opinion, still get a push further down. And then we'll consider our Bitcoin position, if it has a profit, how high the profit is, and so on. If we'll shift all or some of it into XYO instead, because while there is a little bit more risk involved. Obviously, it also has a much higher reward if this is indeed 1, 2, 3, 4, and 5. However, we would double check the labeling before we make such a move, just to avoid halving our capital. XRP should, as said, trade sideways for a couple of weeks, ideally, at least if we use Kennedy channeling technique to make it out of this channel. And everything else, we don't have a 100% labeling, or algo we had something or not yet. Algo we are expecting to, either this is only a partial correction, and we now get another push into this area to, in quotes, finish this strong third wave. But eventually, it would actually make sense if we get a very strong move, although it cannot be strong enough, so that the channel just would get flatter and flatter. So I'm torn a little bit. So we didn't retrace 38.2% here, but we retraced a little bit more than 21.4, although the candles didn't close outside. And it looks like we have a nice ABC pattern here. So it's possible that this is just an intermediate correction of this move, but this move isn't finished yet and should go to the next target area here. And then from there, we would get our bigger retracement. We'll keep an eye on it and then act accordingly. And other than that, I think, nothing else I want to look at today, to be honest. If there are no requests in the chat, I think we'll call it a day and I get some other things done. As usual, our biggest position is GameStop, or not as usual, but as it's been the case for the last couple of months, our biggest position is GameStop. So the one thing to watch is going to be GameStop. But then on the other hand, because our shares are, in quotes, in profit, the calls that we wrote are exactly at the $30 strike price where we originally got them assigned through $30 cash secured puts. And we made, most of all of our return with selling covered calls and cash secured puts. So even if we get the shares called away, we miss out on a potential profit here. And our option only expires in January 17th. So the worst thing that actually could happen is if GameStop starts to rally a lot and we don't get the shares called away before January, because that would mean we would then get the money. We missed out on some profit for those 600 shares, and we would not have a decent price to sell new cash secured puts. But outside of that, even then, we still made a profit, a decent one, and our performance for the year is not bad so far. So so I think no matter how this plays out, the worst case scenario would actually be GameStop would need to fall below 20 and stay there. Then we basically lose our existing profit that we made the last couple of months. So it would need to fall almost 30% and stay below that level. But even then, we still would hold the shares and could write covered calls every week to earn premium. So even that would not be an end of the world scenario. Either way, that's it for today. So let's switch here for a second. Quick reminder, like, subscribe, enable notifications. So I said that's it for today. Thanks for stopping by. I hope you were able to take something away from this live stream. If you disagree with some of my predictions, feel free to share them in the comments down below. Other than that, as said, like, subscribe, enable notifications so you don't miss out on future episodes. And with that, see you then tomorrow, slightly before market open, again for another episode of Daily Market Mastery. Till then, bye-bye.